Donald Trump has said he wants to use tariffs on China and Mexico and many other places around the world that import goods into the United States.
We're going to protect those companies with strong tariffs.
So will this create an economic boom or an economic bust? And will this reignite inflation, or will it slow down the economy to the point where we could see more disinflation, if not a recession that could lead to outright deflation? I'm going to answer these questions for you in 3 simple, fast steps. Step number 1, let's go over the argument for tariffs. Why do people like Donald Trump say they are a good idea? And tariffs are actually pretty simple concept. Let's say we've got business XYZ, and this is an American corporation, and this is an imaginary border, we'll say. So if we've got Chinese company ABC that is importing goods, represented by this blue square, into the United States, what Donald Trump does is he says, well, we are going to increase the cost of those goods by 100%. Let's just assume, for the sake of this example, that the tariff is 100%. So normally ABC would be exporting that good into the United States, let's just say for $5, and competing with company XYZ, but now all of a sudden, with this additional 100% tariff, which is basically a tax, it's just a 100% tax, now all of a sudden this good goes up to $10. So the American consumers, which good are they likely going to buy? If they're very similar, one is $10, one is $5, well, obviously it's a no-brainer. They're going to buy the domestic product from company XYZ. So the gist of the argument here is this protects domestic U.S. businesses. We put America first. Now, a lot of economists call this protectionist policies, if you've heard that term before. And it's not just for existing businesses. They argue that this really helps startups as well. Because when startups are limited on capital, they're limited on resources, they don't want to compete with China and India, Malaysia, Mexico, etc. It makes it harder for them. So this kind of just is like training wheels for American startups till they get to a point where they can compete, and then maybe you can take the tariff off. So these tariffs are used for multiple reasons and multiple strategies. But the main thing that Donald Trump is talking about is protecting existing corporations in the United States. So the great example of this would be the car companies. Let's just go ahead and put a 100% tariff on all the Japanese cars that are coming in, or the Korean cars. So relative to their counterparts in the United States, they become very, let's just say, undesirable. Because if you've got the choice between a Ford or let's say a Toyota, and they're the exact same car, but the Toyota is twice the price, again, you're going to go with the Ford. So another argument here is this keeps manufacturing jobs in the United States. And these are the good jobs that we want throughout the Rust Belt, the Midwest. Let's bring those jobs back to the good old USA, and that's going to increase the standard of living for not just those people in the Rust Belt, but for the entire economy, because those people that make more money, they're going to spend that money back into the economy. You have an economy that's much more circular, so instead of money going outside of the United States, bringing goods in, it circulates within the United States, taking nominal GDP higher and higher and higher. This is the argument. And a lot of the people that favor tariffs, like Donald Trump himself, will point to history and say, well, look at how successful we were in the United States in the late 1880s. We had the Industrial Revolution, and we have tariffs then. So if we just have tariffs now, then we're going to have another industrial revolution. They're just taking that correlation and assuming it is causation. But you guys know that often that's a very big mistake. Step number 2. Now let's go over the argument against tariffs. Well, first and foremost, we go back to our little drawing here that shows us how tariffs work. And what we have to understand, there are two different scenarios. So number one scenario would be where business or corporation XYZ doesn't really exist in the United States. As an example, most of the stuff that you buy from Home Depot, Walmart, Target, that's all produced overseas. We don't produce any of that stuff here in the United States. So there is no business XYZ. There is only business ABC. And you say, well, George, if we put these tariffs on, then we're going to create those businesses here in the United States. Now, not really, because, for a lot of different reasons. But number one is to create goods. It's not like creating a piece of software where you can just do it really quickly. Usually, it takes years, sometimes even decades, to build the infrastructure needed to produce a certain widget. So now going back to this, let's assume for a moment that XYZ doesn't even exist in the domestic economy. So the only goods we have access to at, let's say, Home Depot, Walmart, Target, are coming in from ABC, and Trump puts a 100% tariff on them. Okay, what's going to happen to the cost of the goods that you buy daily? Well, they're likely going to not just go up, but go way up. But what's counterintuitive is that doesn't necessarily mean that we get broad-based inflation, consumer price inflation, like we saw in 2020, 2021, and into 2022. More on that in step number 3, where I'm going to give you my prediction as to whether I think these tariffs are going to create inflation, disinflation, or outright deflation from the economy actually contracting. But getting back to our second point here, usually the quality also goes down. So prices up with the stuff that's coming in, and quality goes down. Well, how can this happen? Okay, well, let's just assume for a moment that because ABC is selling their good for $10, there's zero demand. What's going to happen? They're going to stop exporting that good into the United States. So then, effectively, XYZ has a monopoly on the entire industry. Well, if they have a monopoly on the industry, there's no competition. They get, figuratively, fat and lazy. And therefore, why should they produce a quality product for all the consumers in the United States when they're being protected from their competition from the actual government? And on a quick side note, since retiring in 2012, I have lived in countries that have extensive tariffs, and I have seen it with my own eyes, where the quality for the domestic consumer, the average Joe and Jane, plummets. But the worst part isn't necessarily the prices going up and or the quality going down. It's these tariffs become entrenched in the political system, with the central planners, the authoritarians, the elite, if you want to call them that, and you see massive corruption. And I'd like to point out the late 1800s is a perfect example of this. So you can imagine that if we implement these tariffs, is that less central planning or is that more central planning? Obviously a lot more, and those central planners are going to pick the winners and losers based on who voted for them or who they're friends with. It's absolutely crony capitalism, and again, it leads to massive corruption. And you don't have to take my word on it. Just ask yourself, why did we move from a tariff-based tax system to an income tax to begin with, which in and of itself is terrible? Editor, let's cut right to this article from the Cato Institute. At the same time, high tariff protectionism continued to attract rent-seeking interest groups, and they're talking about the late 1800s and early 1900s. The sheer extravagance of the public corruption around tariff schedule revisions came to a head in the late 19th century. eventually leading reformers to call for the abandonment of a tariff-based revenue system. Since tariffs were ostensibly a revenue device under the Constitution, swapping a different federal tax system would obviate the need for their continuation and thereby break the protectionist interest group coalition. This was the primary argument behind the federal income tax movement that eventually carried the day in 1913. So I want you to think about how bad of a system income taxes are right now. And just think, they were an improvement from the system of tariffs that preceded this in 1913. So what Donald Trump is telling you is he wants to go back to a system that was far worse than the horrific system we already have in place today. Now, before we move any further, I want to address another argument that I didn't go over in step number 1, which I should have. And this argument, we kind of touched it when we went over the history of tariffs in the late 1800s, early 1900s. But it's this idea that Donald Trump puts forth that you can go ahead and decrease the income taxes, if not eliminate them, just by increasing tariffs or implementing these tariffs, because the amount of tax revenue that is generated from the tariffs will offset the decline in revenue from the income taxes. Okay, well, let's think about this. If we put a 100% tariff on the goods coming from ABC, likely no one's going to buy them. I mean, that's the goal, right? So what's going to happen is ABC is going to stop exporting goods to the United States because from a financial standpoint, it doesn't make sense anymore. Okay, great. So now let's go ahead and take it to an extreme and say that you have 0 imports coming into the United States. Fantastic. Where's your tax revenue? It's gone. Now, let me be very clear. I am not saying I am in favor of the federal government generating taxes to begin with. That's a topic for a completely separate video. All I'm doing is addressing this narrative that if we increase tariffs or implement them to begin with and do it in a smart way, that it's going to offset the lack of income that we would have from decreasing the income tax to begin with. And ironically, let's assume you are someone that assumes the federal government should be collecting tax revenue for the greater good. The better these protectionist policies work, the fewer goods that are coming in, the less taxes that are collected, the closer you get to the entire system completely unraveling. And let's go back to the history one more time. So we did that little edit right there. And by the way, I don't know how closely you guys are paying attention, but I forgot to put step number 2 up there. So if you're wondering why we had step number 1 the whole time during step number 2, it's because I forgot to do it. All right. Some behind the scenes intel there for you. So getting back to the history, I want to point out that when the tariffs were so successful, according to the pro-tariff people back in the late 1800s, early 1900s, federal government spending as a percentage of GDP, in fact, government spending as a percentage of GDP was 5%. That means the private sector represented 95% of economic output. And which do you think is going to be more efficient? The public sector, the government, or the private sector? Obvious answer. Now, today, it's about 50-50. So what this means is we have a massive amount of red tape, bureaucracy, regulation, etc., compared to what we had back in the late 1880s. And therefore, even if you want to argue that these tariffs were a net positive back in the day, the conditions are so dramatically different that you're comparing apples to oranges. Because what we're assuming is if we had the government this size instead of this size, then it is true. If you made some different incentives, we could bring manufacturing right back here to the United States. But right now, under these conditions, are you going to take your $1 billion and build a factory that isn't going to produce a widget for the next 10 years, just assuming that you get a return on your investment, having no idea who the president is going to be after Donald Trump and how far left, or let's say socialist, they will actually lean. Of course you wouldn't. You wouldn't take the risk to build the factory in the first place because the conditions are much different today, meaning the amount of bureaucracy, regulation, and the big unknown is so much greater of a risk compared to what it would have been back in the late 1880s or early 1900s, where the government intrusion into your business or the risk of an overreaching government was almost non-existent. Step number 3. So now let's go over my prediction. Will these tariffs create massive consumer price inflation or interest rates going up at the long end of the curve so mortgage rates continue to go higher and higher and higher? Let's start by looking at a chart, and basically from today's date all the way through Trump's term, we'll call it the next 4 years. And on the left, we've got 0% up to 2% down to a negative 2%. I want to start by looking at money supply growth represented by this green line. Now, my base case is it's pretty flat, at least over the next year, consistent with what we've seen over the last 2 years, where it's been flat, slightly up if we're looking at the monetary aggregates such as M2 money supply or M1. Editor, you can go ahead and throw up a chart so the viewer can see what we're talking about. But the bottom line is whether it's flat or just slightly up, it's way, way below trend. And if it's below trend, it's very difficult to have consumer prices reaccelerate. In other words, go from 2.5% to 3 to 5 to 7 to 9, just like we saw during 2020, 2021, and into 2022. So although I do think that prices at Walmart, Home Depot, Target will go up, represented by this blue line, I don't know that if you take the whole basket of goods that you buy daily, that the prices are going to zoom higher. It's not going to be a 1970s type of inflation. But let's also remember that even if prices do go up slightly, aggregate demand will likely go down because of the monetary phenomenon that we talked about earlier, which means the consumers are just buying fewer and fewer goods. And the biggie here is the standard of living decreases. Why? Because, I've said this many times on these videos, that the measurement of wealth is not currency units, it's not dollars, it's not Bitcoin, it's not gold. It's simply how much stuff you have access to and the quality of stuff that you have access to. It's like being stranded on a desert island. And let's just say all you have are 2 coconuts, some sand, and water, but you have a big chest full of $1 billion. Are you rich or are you poor? The answer is you are poor. So what these tariffs will likely lead to, even if we don't have consumer price inflation, is a lower standard of living because Americans will have access to less stuff, represented by the red line. And again, the stuff that they can buy likely will be a lower quality. And that is if Donald Trump is able to actually implement the tariffs to the degree to which he was bragging about on the campaign trail. For more content that'll help you build wealth and thrive in a world of out-of-control central banks and big governments, check out this playlist right here, and I will see you on the next video.